Welcome to this edition of the ESOP University presented by PCE Investment Bankers. PCE is an investment bank providing M&A and ESOP transaction services to middle market businesses. Today, we're discussing the many benefits available of ESOP ownership to shareholders, companies, and employees. I'm David Jasmine, and I'm an investment banker for PCE Investment Bankers located in the Orlando area office. Let's get started by looking at a few ESOP statistics. Currently, there are approximately 6,600 companies operating in the United States that enjoy the ownership and benefits of ESOPs. They employ approximately 14 million employees and hold 1.4 trillion in assets. Industries that favor ESOP ownership tend to be those companies that rely heavily upon their people for their success. I've heard it described as if your most valuable asset walks out of the door at the end of each day, your company is probably ideally suited for ESOP ownership. So where are ESOPs located? Historically, ESOPs have been favored by ownership in the Midwest and South. However, as taxes in the Northeast and West Coast have risen, we have also seen a rise in interest in ESOPs, both from selling shareholders, but also as companies taking advantage of the tax incentives afforded under ESOP ownership. Who benefits from the ESOP ownership? There are many groups, but basically, shareholders, companies, and employees all benefit from ESOP ownership. Let's look at these groups one by one, starting with shareholders. ESOP ownership and the sale of their shares to an ESOP is a stock sale, not an asset sale, which is common in most sales of privately held businesses to third-party buyers. An ESOP is a willing and friendly buyer of your stock, and the transaction can be tailor-made to meet the owner's objectives and provides the ability for the owner to diversify their wealth and have liquidity at closing. ESOP, the sale of your shares to an ESOP, holds favored tax treatment. ESOPs allow for the potential permanent deferral of capital gains tax, and sale to an ESOP can provide a powerful financial tool for generational wealth transfer. Day-to-day operations. When selling to an ESOP, shareholders can continue to remain effective control of the management of their business even after the sale of their stock to the ESOP. ESOP sales protect confidentiality both for the selling shareholder and, importantly, for the company. It is an opportunity provided to the shareholders to continue to participate in the growth and equity growth of the business even after they've sold their shares to the ESOP. So let's jump over to benefits to the company. ESOP ownership for the company converts the company to be looked at as kind of an evergreen company. No longer are employees sitting around worrying about who will be the next owner of their business, and will that owner come in and change the operations and eliminate or change their careers. It provides a path for employees to know where their future is. And employee-owned companies are more competitive than others. ESOP-owned companies are basically tax exempt on their income. The ESOP debt is tax deductible, so therefore debt taken on to pay for the shares is paid with pre-tax dollars from the earnings of the business. And contributions to the ESOP are tax deductible for the business. The ESOP is a willing and friendly buyer for all or part of the business, And ESOPs are passive buyers and don't seek to run the company and the day-to-day operations once the ESOP has taken ownership of the business. Existing retirement plans can be converted or coordinated with the ESOP. And ESOPs are to improve the company's ability to attract, retain, and recruit new employees. Finally, let's look at the benefit to the employees. Employees are beneficiaries of the trust, and no personal cash is outlaid for their benefit, for the benefits they receive from the ESOP owning the company. According to research on employee ownership and corporate performance, 56% of ESOP companies offer secondary retirement plans. So therefore, in addition to the ESOP, many companies will continue their 401k and other retirement plans. The Department of Labor also recently released a report and determined that ESOPs as a retirement plan were less volatile and had better returns on average than their 401k competing retirement plans. ESOPs are a natural fit for employee-intensive firms, as the largest producers within a business are usually allocated most shares in their retirement ESOP accounts. Employees are encouraged to act like owners in ESOP-owned companies. Additionally, it is very common for ESOP-owned companies to extend additional equity-based incentives for the senior management and management of a business. This provides increased motivation for the employees to succeed and for the company to outperform their competitors. There are many succession planning options, but none have the flexibility of an ESOP. While not right for everyone and every company, ESOP transactions are tremendously flexible and allow an owner to continue to work in the business in their management capacity, offer significant tax advantages coupled with unique gift and estate planning opportunities. There are tremendous employee incentive, and unlike other M&A transactions, the sale to an ESOP keeps information about your business confidential, allows for operations to continue in the fashion and legacy established by you as the owner, and are flexible to permit a partial or full sale to the ESOP. It all comes down to your goals and objectives to determine if an ESOP is right for your succession of your ownership of your privately held business. Thanks for joining today. We welcome your comments and questions, so please feel free to contact me at my information listed here. We also invite you to visit our YouTube channel, where we host our ESOP University and M&A University playlists. We have developed many short-form educational videos to assist business owners and their advisors with issues surrounding M&A and ESOP transactions. Just search for PCE Investment Bankers.